Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so here we're looking at the chart on Saturday morning, September 14th, after AMC closed on Friday the 13th at a price of $4.96, being up about 1.25% on the day. And so in this video, I'm going to be diving into the AMC chart, looking back in time, because I don't know about you guys, but I've been pretty discouraged lately. And so I kind of wanted to go over the emotional, psychological roller coaster that we've been going through over the past few years, relate that to where the current stock price is right now. I think that we could be getting towards the bottom, if not that already being in, which is my belief. And I think that we could be rallying into the close of the year or into next year. So, I'm really excited about that. But at the same time, with this market psychology comes a lot of discouragement. And I think that's where we're at right now. And I think that's actually the best time to be buying or just holding and chilling, waiting for, this to play out. And in this video, I'm also going to be going over GameStop, ticker symbol GME, towards the end of the video, just really relating everything I talk about regarding AMC, relating that to GameStop and the current setup. I think they're both pretty similar right now. I think a lot of faith and conviction has been lost, but I do think that we will be going higher. But, of course, like in all of these videos, I could be wrong. And so anyways, GameStop did close on Friday the 13th at a price of $20.65, also being up about 1.25% on the day. So pretty similar there. Both of them have broken below trend lines that, I thought we would be reclaiming last week. We did not. But yeah, anyways, I am going to now dive into the AMC chart. But first, I am going to take a step back and, go over this, coming back to this point here that I think we can all agree on was euphoria. But before I do get into that, I did want to note that for this video, the y-axis is on the logarithmic scale. And so the reason why I did that is so we can relate these prior times with the more current times. And so I just wanted to note that. And also, before I do get into this, I did want to flip over to this chart, which I did have in last week's video. I'm going to be referring to this frequently. And, just beginning with, like I said, euphoria. I am a genius. We're all going to be rich. And the reason why I want to start there is because I think there is no denying in this chart that was euphoria when AMC, after price has been adjusted, was nearly at $400 a share, hitting a high of $393.63. And it looks like that was on June 2nd of 2021. And I should note this is the daily chart. But before I get into these emotions, the psychology here, I did want to talk about this pattern that I noticed that led up to the big squeeze. And I think that we're experiencing something very similar right now. And so these are two gaps, these two dashed lines. And again, this is on the logarithmic scale. So everything's kind of squished together here. And so we've got this one gap here that was based on the close of January 26th of 2021. That close was at a price of $26.89. You can see that dashed line right there. And then the following day, on January 27th, we had a close of $107.87. And so, we've got these two gaps there from between the 26th and 27th. We closed here, opened up here, and then following the 27th, on the 28th, we opened down here and went lower. So we have these two gaps. And the thing that I think is really interesting about this, that I think relates to the psychology of the markets, is, let's say, I was interested in AMC back here in early 2021, but I didn't have a position, let's say. And, I see this big gap up, and I'm thinking, okay, well, I'm going to wait for it. I don't want to be chasing it. I'm going to wait for this gap to be filled because, I know it eventually will be filled, and it has. but not in this time frame, as we can see. And so if I am this patient trader waiting for this gap to be filled, I think like the best way to create a scenario like this is actually to not fill the gap to the downside. Because let's say I and thousands of other traders, let's say, are waiting for this gap. We have orders placed, let's say, that closes at 26.89. Let's say, we have orders placed to buy at 26.89. Or, if we zoom in on the chart here, let's say we have an order placed at $27, just kind of rounding that up. As you can see, I don't know if you could see it, the low following that squeeze was 28.51. So that gap was not filled. And so I kind of view this as, we have these two levels, and whenever we cross one of them, we're going to break in that direction. And so I feel like these are two lines in the sand, one to the downside. If we would have come to 26.89, we would have broken lower. But that is not what happened. We got very close to it. A lot of people who are waiting for this gap to be filled were probably like almost there. It's going to happen soon. I'm just going to keep my order, and we're just going to take it from there. Let that order get filled. It doesn't happen. It starts to go up, but those traders, they don't have FOMO. Oh, it's pumping up a little bit, but there's this big red candle. It's going to come back down. Didn't come down all the way, but maybe after earnings it'll pull back. Nope, goes up. Eventually, this is going to come back. I'm just going to wait for it. I'm going to wait for this gap to be filled. But then as time goes on, we see here, this was in May of 2021, we see that we actually break to the upside and fill that gap to the upside and start to launch. And so I feel like that line in the sand, is not only crossed then, showing that price will be going higher, but anyone who is waiting for this gap to be filled then recognizes, hey, this gap's probably not going to be filled. I don't want to be sitting on the sidelines with AMC. I was back here. I want to be in on it. So I'm going to FOMO in up here, and then we get this really big move. Doesn't seem really big, but this dashed line, like I said, is right around $107. It goes up to around $400. So that from that move, is a almost 300% move to the upside. And, from this gap here, that represents, let's see, that's about a, over 1,000% move to the upside. So while it does look squashed, there is, a big move there, and that's just because we're looking at the log scale. But anyways, I think this relates a lot to what's currently going on, both with AMC and GameStop. I think that we've got two gaps, one to the upside, one to the downside, and whichever one we hit, I think we're going to go in that direction. So I'm hoping we cross the one to the upside, but it's always possible that we cross the one to the downside. So good to be cautious about that. And then, so yeah, looking at the, emotions of the market here, looking at, all these, I've just kind of drew these based on looking at this chart. I'm sure a lot of it is, biased or, just my opinion. And I think it could be interpreted in different ways. But, like I said, I'm really just beginning with the assumption that this peak up here is euphoria, because I think it's pretty hard to argue with that not being euphoria. And then so moving forward, we have complacency over here. The reason why I view that as complacency is because, we have this big pump euphoria. We've got, the top over here in this region, and then we pull back and then we bounce, but we don't get back to those highs. And so I feel like that was, whether you want to diamond hand for the rest of your life or you want to trim and take profits, I think that was a good price to exit at, whether that's break even or, cutting losses. Not trying to suggest, you guys do whatever you want with your positions, but just looking at the chart, that was kind of like a signal, hey, this is your last chance to get out. This is going lower. But we don't really know that until we bounce again. It looks like we put in a little bit of a double top here, and we get to a lower high. And so I feel like that was suggesting that we're not going back to these all-time highs. It's not going to squeeze again. And so I think there was a lot of complacency here in not recognizing the hard reality that the top was in and then this was going to be pulling back. So if we look back at this chart, complacency, we just need to cool off for the next rally. But the reality is, shortly after that, we dropped down. And the thing that stands out to me about this, I have this line here. This was the low over here. I think when we crossed that line and started to consolidate right around it and then break lower, I think that's when we got into the anxiety region of the chart. And so that is, why am I getting margin calls? I don't know about you guys. I don't trade with margin, so I wasn't getting margin calls. But this dip is taking longer than expected. And so, this dip was taking longer than expected. Then we get this rally over here, cross that line, but can't hold it, and then we break lower. And so let's look back at this chart over here. I have the next one here. Denial is much lower than anxiety. My investments are with great companies. They will come back. And so I feel like denial really came about when, we got this pump here, couldn't hold it, broke down, and then got this pump again, but we couldn't get back to that horizontal line here. While here, maybe there's a case for it goes higher, although we didn't get, confirmation above that level. That would be, closing above that line here on March 28th of 2022. We did get that, but we didn't get a secondary close above that level. While we did wick much higher, we closed lower than the high of the 28th. And so it started to pull back, didn't get that confirmation. And so I think that was a signal that was, a top there. But anyways, I think the real signal that we were in denial at this point was not getting back to that line and starting to pull back. And so that is how I see that there. And then moving on with the chart here, this is where I feel like my interpretation gets a little bit gray, but I think it comes back to those two gaps and why those gaps suggest to me that, what I have drawn up here is correctly as far as the emotions go, but I could be wrong. And I think that comes in with where I have anger placed. So I'll come to that in just a minute, but first, panic. This corresponds with the the AMC preferred equities being converted back into AMC stock as far as I remember it, and also with this, 1-for-10 reverse split that took place on March 24th. Of 2023, so a little over a year ago. And so here, I have panic listed there where we gap down and this really starts to cascade lower. And so looking at this, panic is shit. Everyone is selling. I need to get out. So I feel like that's why we had this cascading effect. It's just like people lost faith, maybe around the reverse split, maybe around the ape. And so I think that's, what we're looking at here. This was panic. And for me, I feel like this is the time when, I was holding back here. And I think this was the time that I started to think, oh, well, I want to panic, but this is actually probably a good time to be getting my average down. And so I was doing that here. I should have been more patient. I should have waited for lower lows to come in, but it is what it is. This is when I really started to build up a much heavier position. And then as we come down here, we have this gap here right around $20, which I'll come back to towards the end of the video. And then we start to consolidate here. And I view that consolidation as possibly the capitulation that, the bottom might be in there, but then we start to roll over again and people just completely lose all faith. And so with capitulation here, it says, I'm getting 100% out of the markets. I can't afford to lose anymore. And so I feel like this was really just like a digestion of that bear flag there. And we start to break lower and and then pull back. But, this could be moved over. This is, like I said, where my interpretation gets a little fuzzy. But I have from that anger is over here, perhaps corresponding with the lows of February of this year, that, we were pretty angry there following this gap down and having hit this little, peak here around 1143 that was on November 6th of 2023. So I think that's a pretty important level. You can see why I think it's an important level. But I think, because of this kind of like double test of that level, my emotions here could be adjusted. But again, this this double gap makes me think that, what I have drawn up here is correct. But anyways, let's look back over at the chart here. Anger. Who shorted the market? Why did the government allow this to happen? I think we all know why. Because of corruption, because of, just really, really bad stuff that I don't need to get into here. But the thing that makes me kind of question my anger analysis is that, here between capitulation and anger, we have kind of like this double top with this lower low here. And so that makes me a little bit concerned that this portion anger could be, this low here at 238 because we kind of have this double top following that. So I'm wondering if what I have listed as depression is actually being anger. But, you could look back on the videos that I was making around that time. I personally don't feel like I was angry at that time. I feel like, if anything, I was more depressed and I was just trying to do these weekly videos because I knew that there were others who were also just holding and we just needed a little bit more faith in, what we're holding. And so I don't think there was anger here. Maybe it's different for you, but, I feel like that was depression, and depression then corresponds with this lowest low that we see here. My retirement money is lost. How can we pay for all this new stuff? I'm an idiot. But, it is possible that we're going through depression right now rather than disbelief. And so I think that we're going through disbelief, which is kind of like double listed here. Disbelief over here that this is a sucker's rally, which I feel like leads into this. But there's also disbelief over here that, this rally will fail like the others corresponding with this low. And so, I have disbelief listed twice on my chart, but, perhaps that's a misinterpretation. And so from over here, I have depression listed at the lows of 238. And then shortly after that, we got this big rally, which, was a sucker's rally. Or, maybe that's, again, just my misinterpretation of this as that leading into hope and continuing higher. And so if that is the case, then I think that sucker's rally was actually over here where we got the double top coming to that red line at 1143 and then pulling back. And if that's the case, then, I think we could have a lower low coming on the table, and maybe we're not in depression yet. But that doesn't match my emotions. That doesn't match what I'm going through. I think that we're, over here in disbelief and or shortly after, depression. And so coming back to the chart here, this is where, I get a little more hopeful, and perhaps it's a little premature. But, from that depression, we get the suckers rally. We pull back and we really just start to consolidate here in this range between about $4 and $6 a share. So the price action that we saw this week, while it was disappointing, while we have broken below this uptrend, we're still right around $5 a share. So I don't think there's anything to sweat. I think that AMC priced between 4 and 6, there's nothing really going on there. It's just kind of boring. And with that being said, since we've consolidated so much in that range, really right around $5 a share, I feel like it's pretty unlikely that we're going to come back down to 238. So with that being said, I think that we're definitely beyond this point, and I think that the rally that we saw was the suckers rally, and that we are getting ready to start moving into the hope territory and start going up. We have been holding this for more than 3 years now, and so I could definitely see a market cycle being encapsulated within about 4 years. Maybe it's 5 though if we do start to break below this gap here at 291, which was the the close from May 10th. 291, the low was 290. But with that gap there, that's at 291 as we did start to move higher. And then on, May 14th, we formed a gap to the downside, that being at 268. And so neither of those gaps have been filled yet. And so that makes me think about the scenario that AMC was in prior to the squeezes between the squeezes of 2021. That we're just, consolidating in this range. We haven't hit the lower gap. We haven't hit the higher gap. And, I think that right around here breaking this uptrend. I thought the news that we got, or the post that we got, the meme from Roaring Kitty with GameStop earnings calls, I thought both stocks would start to rally around that, AMC being a sympathy play with GameStop. But we really didn't get any news around their earnings, and it just kind of faded, also breaking below the uptrend. And so, I feel like there's just been a lot of conviction lost the past few weeks, with breaking this uptrend, which AMC did before GameStop. And, it's just been pretty discouraging, And so I think that we are in this phase of depression and disbelief. But like I said, I do think there is hope. And so what I see, I had talked about there being a gap down here around $3 a share. I noticed it when I was recording a video. Here, it's at $2.91. I think just like back in 2021, if we're patient traders, we see this gap here at $2.91. Let's say we say, I've added enough up here. I'm going to wait for $2.91 to fill. And, we might come back to that scenario of 2021 where the gap to the downside was never filled, or at least not until after, the big move to the upside, breaking above the gap to the upside. And so my hope is that I have belief still. My belief is that we're not going to come down to 291, that we're not going to fill that gap, and that we're definitely not coming back to 238. And with that being said, though, and I don't know about you, I have accumulated a lot of shares in this range, also going back in time when price was higher. And so, I don't really want to be accumulating anymore. But if it does pull back some, I definitely want to be taking advantage of the discount. I just don't think it's coming down to $2.91. I don't necessarily think it's coming down to $3. I had talked about $3.50 from prior videos. I believe on May 13th, the open was at, $3.52. So right around $3.50. So I feel like that's a level where maybe we could get a dip. And that dip maybe, corresponds with this. Although, I feel like we're kind of experiencing that right now with having broken this uptrend. But we are still above the 786. That's at 441.3. And, we have tested that. We have broken below it a few times. And I should note this retracement is linear. It's not on the log scale, even though I'm looking at the log scale over here. This is a linear retracement. That's why the 786 looks closer to the middle. But anyways, if you draw this with a y-axis that is linear, that will look like it's 78%, on the way down. But anyways, we've respected that level. We're still holding it. So I feel like, we're looking pretty good. But if we start to break that, I think 350 is perhaps the lowest the stock price will go, because I don't think it's coming down to $3. And then I think that we'll break above 685. But where are we going after 685? Coming back to this, this is why I kind of questioned, my anger placement. Because I'm thinking, we could be going back to, 1143, right around there, getting back to this high. But when we start to see hope over here, that's higher than these highs here. And so I think that we could be going past $11, $12 a share. And the level that stands out to me is this gap here following panic. The close on August 23rd of 2023 was at 1960. So, I could see price getting up to there, and then maybe we pull back, we find disbelief, this red line, as support right around 1143. And so that is kind of, what we saw here, pulling back, finding these highs as support before starting to go higher. And of course, this is just a cartoon, but, I think that this does relate to what we're seeing. And I think these gaps are really important to be paying attention to, that, I think that we need to be reclaiming them. And, specifically this one to the upside, 685. If we start trading above that, I think we're going to see some violent moves to the upside, because anybody who is waiting for this gap to be filled is then going to be FOMOing in. And then we start to see that violent price action to the upside. So I think there's a lot of hope in the near future, but it might take some time to get there. And then now that, I have gone over all this stuff, I'm actually going to switch the y-axis back to linear. because I wanted to talk about these Fibonacci retracements. And so I had talked about the 786 year from the way down, that being at 522. We hit a high of, let's see, 525 on August 26th. I think we need to be reclaiming that to reclaim this uptrend. But really at this point, reclaiming that would be, probably getting up to around 540 or 545. So I would look for that in the week ahead. It's disappointing. It's discouraging that we couldn't get back above 525 this past week. But I do feel like we have bounced. We're consolidating here. Maybe that's a bull flag, and we're going to start to break higher. We didn't retest this 786 at 459. So, I think that's a good sign. But I would look for, if we break below 459 next week or in the coming weeks, maybe that's going to be showing some weakness and we get back to, this 786 at 441. And if we break that, maybe 350 is a great dip buying opportunity. But like I said, I don't think we're coming down to $3 a share. I think we're going to be breaking above 685, getting back to 1143, and maybe filling that gap over here at right around $20 a share. So, I think that there's a lot to believe in right now. So don't lose all faith. Don't lose your belief in the company or investment yourself. We're all here together. That's why I make these videos, just to remind you guys, not to convince you to buy, to sell. Those are your decisions. But just to let you know, there are people, there's retail still in this. And, we're doing this together. And on the note of doing this together, being in this together, sorry, I'm probably not going to edit that out. I've got work soon and, I'm tired. I've actually got a cold. But anyways, talking about GameStop now, because we are in this together, I am just going to minimize this so we get the full picture here. I've got a similar uptrend based on one of the lows, not the all-time low over here at 995, but it looks like the low from April 23rd of 2024, and then I've got this pivot low over here of August 5th. That's how I draw that uptrend. And with GameStop, we also have two gaps, one to the upside that we nearly filled over here, and then this one to the downside. We haven't filled either of them yet. So just like with AMC, I think that, GameStop is not coming down to 1746, which is the gap down here. And, I think that we're more likely to be filling the gap to the upside at 48.75 and then start to rally higher. And like I've said before, I think this could then be moving into the triple digits. So that is my stance with GameStop. While we have more recently, unlike AMC, which broke this uptrend earlier, we have over the past week following earnings gap down and are trading below this uptrend. So I think we've lost, a lot there, but I think we're holding some pretty important levels. One is this low that was hit on August 28th of 1988. We did wick lower than that, but we're trading above it. We're trading above $20 a share. So I think that's excellent. And then also over here, the 786, 967. I'm not an aggressive buyer, but I definitely was taking advantage of that dip here because of this level that I've marked. So I think that's good, but we didn't pull back to, 1873, which was the low on August 5th. So I think, again, that's looking really good. Levels to the upside to be paying attention to. Roaring Kitty's average at 2341. Of course, we want to be paying attention to that. And then this high over here looks like it was at 24.69, so just having fun with those prices and, that price being the high from September 3rd. And while we did get, wicks above it, over here, we didn't get any closes above it. And so that's what we need to see. We need to see closes above 24.69, or more specifically, since we have wicked higher, hitting a high of 25.02 on September 9th, we need to be seeing closes above 25.02 or getting to this 1618 from this blue Fibonacci here. That's at 25.09. Would be great to be reclaiming that. And so maybe that corresponds with, crossing back above this uptrend, reclaiming that, which would be around the middle of October. So, while we might be hanging down here for, another month, could be some really nice dip buying opportunities before we start to move higher and reclaim those levels. But with September 20th, the OPEX coming up next Friday, maybe we see some violent moves to the upside around that. So I definitely do think that there is a lot to believe in with this stock, as well as AMC, and we are all retail. We're in this together. So, I just wanted to put this video up because I don't have enough time working this weekend to put out videos on both. Sorry, this is probably going to be unedited, but I just wanted to have us out here for you guys because, I'm still here. I still believe, and I hope that you guys do too. I hope that you haven't lost your belief. And, because after belief comes hope, comes optimism. We regain that belief. I don't think we're there yet, but I'm just trying to think ahead. And then after that, the thrill and euphoria. And so we've got a lot to look forward to. Maybe a little bit more downside, but I don't think a lot more downside. I think that, just hang in there as Roaring Kitty, has with his poster. And, I think that we're going to be looking really good really soon. Just hang in there. I'm with you guys, and we're all here together. And I hope you're all having a wonderful, wonderful weekend, not working, not having a cold. As always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Thanks a lot for watching. Take care, you guys.